target below swing low, and we will simply mark our 1:2. Alright, now let's see what price is it. Hey everyone, so today in this video I'm going to teach you a simple day trading strategy which you can use, and you can literally pass your funded account or trade your own capital. And the strategy is very simple. You do not need any kind of daily bias or lot of structure or liquidity knowledge for this strategy. This is pure mechanical, and anyone can use it. You do not need any kind of experience to use it. So if you are new to my channel, let me introduce myself. My name is Harsh and I am a full-time forex trader since last 5+ years. So you can trust me whatever I am saying. Also, you can backtest and forward test the strategy to see the accuracy of it, and to test and to check whether it's work or not. Alright, so let's start the video. First I will explain the strategy in the theory, then I will show you the practical examples on the chart, so you will get the complete clarity about the strategy. Alright, so let's start. So the strategy is day trading strategy, and use it on indices like Nasdaq, SPX, US30. Do not use it on forex market, but forex market is kinda slow, so avoid the FX market and use the indices. Alright, also you can use it on gold or indices, but avoid the FX market. So the strategy is pretty simple. It is a day trading strategy. In this, what we are doing is we are simply capturing the low of the day and the high of the day. So whenever price wants to go bullish, so what the green candle do, let's say it is a daily chart. So what price do, it is the open of the candle, so price goes below the opening level and then made the high of the day. And whenever the market is bearish, what price do, price go, this is the opening, so what price do, price go above the opening of the candle and then made the low of the day. So this is a bearish day and this is a bullish day. It is a daily chart candle. So what we are going to do is simply we are capitalizing the opportunity on the lower time frame. So we understand the daily candle goes bullish. What it do, it open, price made low of the day, and then it goes upside. So we understand this is the bullish scenario, and we understand this is the bearish scenario. Price open, it goes above the open and then close below the open. So we understand this is the bearish scenario, and we also understand the indices market open at 9:30. So what we are simply going to do is marking our 9:30 level. Let's say this is our 9:30 level, and this is the price opened and goes up. So we understand market open at 9:30. What price going to do, simply going to below the opening, and then we will going to take our entry here, and then we will simply target 1:2. Alright, so I hope you understand the concepts. What we are simply going to do is buying below the opening of the candle and selling above the opening of the candle, and the market open around Asian session time. Alright, so let me show you some example on the chart so you will get the complete clarity. So here is the example number 1. The time frame we are going to use in this strategy is 15 minute and 5 minute. 15 minute to understand the trend for our bias, and 5 minute for our entry. However, we do not need any kind of bias for this strategy. We simply need two condition. Condition number one, we wants to see price order flow is bullish before 9:30. Alright, and for the bearish scenario, we wants to see price order flow is bearish before 9:30. And when the market open at 9:30, it will simply grab the liquidity of day high and we will sell above the day high. And for the bullish scenario, when price open at 9:30, it will simply grab the liquidity of day low, and then we are going to buy below the day low. Alright, so let me show you some examples. So here is example number 1. Let me mark our 9:30. So this is our 930. So what happened here, this is our opening of the price, and we understand the order flow here is bullish, as we can see. Alright, so the order flow is bullish. Then what price will do, we will simply mark our day low, because the order flow is bullish. If the order flow was bearish, then we would mark the above, then we would mark our day high. So this is our day low. Now we will simply mark this, and then it got swept around 645, but we are going to enter only after 930 opening. Then what price did, this is our 930, this line. Then we understand this is our 930, and we can see the price swept before the 930. Now we will simply going to at 5-minute chart after 930, and here we have our displacement on the 5-minute chart, and we can simply take our entry. Target below swing low, and we will simply mark our 1:2. Alright, now let's see what prices did. Target is smashed. Alright, so let's see some more examples. So here we have another example. This is our Nasdaq 15-minute chart. Again, we do not need any kind of daily bias or anything. All we need is simply understanding of the order flow of current day. If the current day order flow is bearish, we are looking for the sell. If the current order flow is bullish, we are looking for the buy, where above the opening we will look for sell, and below the opening we will look for buy. So in this case we have bearish order flow, as you can see, right? And then this is our 930, and this is our day high, and it got swept exactly at 930. Now we will simply going to drop our lower time frame at 5-minute. Now we have what, displacement. Now we are simply going to take our entry, stop our swing high, target simply 1:2, and you can see we literally achieve the target. Now let's see some more examples, so you will get the more clarity. So here we have another example. This is Nasdaq 15-minute chart. The order flow is bullish, as we can see. We will mark our low of the day, price got swept. Here we have our 930. Guys, sometimes the 930 candle swept the price, sometimes the swept happened before the 930, and in this case the swept happened before the 930. Now we will simply drop to the lower time frame, and we can see here we have our displacement. We will take our entry, stop below swing low. In this case, if you do not put the buffer, you will get liquidated, but if you put 10-point buffer, you get saved, and target 1:2. So always put the buffer before, because sometimes because of the news or the volatility get so high, so price swept the low of the candles, and then simply 1:2, and boom, target is smashed. So I hope you get the clarity of the strategy. So the strategy is pretty fucking simple. Let me summarize it. So we have our 930 opening. If our current day order flow is bullish, what we will look for buy below the opening of the day. If the current order flow is bearish, we will look for sell above the opening of the candle. Then we will simply drop to the 5-minute chart and take our entries. So that's it for today, guys. If you like the video, make sure to subscribe and leave a comment. It will motivate me to make further videos. Thank you for the watching.